Hello, today I want to talk about how to match your investment returns to your risk tolerance. The stock market has been super generous, especially this year. This year, 2023, already the Standard and Poor's 500 is up over 17%, and we still have the month of December where we are expecting a Christmas rally. So it could be easily, we could end up the year easily 18% or higher. Who knows? But over the past 10 years, if I add all these figures from 2013 to 2023 and divided by 10, then that means that we have been getting an average return of 16%. And this is great. When you buy real estate, you cannot expect to get this kind of returns. And when you build your own business, I don't know if you can always expect this kind of return. So this is fantastic for passive investment, and I will take that any time of the day. But it's not free. This comes with a lot of sacrifices because a person who invests in a stock market and they can see this kind of volatility. They could see minus 19%, minus 6%, minus, this is almost like minus 1. So yes, there are amazing years where you can earn plus 26% or plus 29%, but that is at a risk of uncertainty, insecurity, fear, volatility, mania, and panic. Okay, so the question is, are you willing to pay that price of feeling uncertain about your money all the time in order to get this positive return? Well, that not everyone is willing to pay that, and not everyone is in the same situation. For example, if I am in the wealth building stage of my life, then I may be able or willing to take this risk. Look at this big drops here and big drops here. Maybe I am willing, if I'm young, maybe I'm willing to take this risk. Let's say I'm older, let's say I'm 70, and let's say I have already made my money. Let's say, I don't know, let's say I have $2 million sitting in the bank account, okay? This will provide me enough for me to live for my next 40 years. Who knows? That's my standard of living. But then my main objective is not to earn more, but to preserve what I have. So different people have different objectives with their money. And making money is not the same as preserving the money. And many people make the decisions depending on where they are in their life. So we cannot call someone who refuses to invest in the stock market, oh, they are not doing the right thing. Maybe they are. So I have a friend, his name is Michael. Michael, he likes to make conservative, low volatility investments. So, and the array of reasons that this person has given me, they make total sense. Well, there was COVID. If you notice here, COVID, the stock market had this huge drop. This is enough to make anyone scared. I have several friends who saw at somewhere around this downline, and who couldn't blame them. People were talking about the end of the world, the end of civilization, a pandemic that was just spreading like no other pandemic we have seen in our normal day. So yes, a person could be called a rational person for selling somewhere along this line. But then not to delve into politics, but there are people who don't like President Biden. And we are here in Canada, but who is the president of the United States determines a little bit the political spectrum of everybody across the globe. So my friend in particular, he doesn't like President Biden. And then there were supply chain disruptions, like ships couldn't come from China to Canada and the United States. So, that was a distortion in commerce, and many retailers were not doing great. And then there was a banking crisis, and there were meme stocks that were going up and down without any reason, and there were government shutdowns. So from looking at these pictures like right here, anyone who refuses to take this amount of risk it makes total sense. But we just have to remember, if a person is willing to take the risk, historically the stock market have outperformed on the long run. Maybe not from here to here, so from one day to the other, from 1 year to the other, a person could lose very much. Like I said, 2022, I lost almost 20%, 1/5 of my savings just disappeared like that, and there was nothing I could do. I could sell, but then I am giving up the potential of earning. So this is what happened last year, 2022, and then I'm losing out on the potential of having this positive 17% that we are having this year. So so I have to trust history, and I also have to look at myself and examine how much am I willing to tolerate? What stage of my investing life am I in? So all this to say that everyone knows about Indian investing by now. Everyone knows by now the Standard & Poor's 500 or the Toronto, 300 or the TSX 60. We all know about these indexes. But are we all willing to tolerate that risk? No. For some people, investing in government securities makes more sense. So in the realm of investing, we ultimately reap the returns we are willing to tolerate. Let me know in the comments what kind of return are you willing to tolerate. Are you willing to sit out drops like this with the potential of earning long returns like this, or do you want to just keep it safe and maybe have less volatility and less returns? Let me know in the comments, and talk to you soon. Goodbye.